Welcome. My name is Travis Patton, a partner in PwC's National Tax Services Office and our exempt organization tax practice. I am very pleased to also be here today with my colleague Janice Mays. Janice, you joined PwC after 40 years on Capitol Hill, many of which were in the Ways and Means Committee, Chief of Staff of that committee at one point, and thank you for bringing your insights today.
It's a pleasure.
Well, we are going to talk today about the process for tax reform, not necessarily the policy. There are many policies that have been proposed impacting exempt organizations, but Janice's insight on the process is where I'd like to focus our conversation today. And that process, Janice, seems like it's moving at a breakneck pace. The momentum behind tax reform is there. But how did we get to today?
It is interesting, isn't it? We've all had tax reform fatigue. We've sort of waited and waited and waited, and now suddenly we're in this hurry-up schedule. We're going at light speed for Congress at this point, and they do want to do that. We've had the administration and the tax leaders in both the House and the Senate put out a framework, and now you've got both committees working from that framework, building slightly different bills, but things that can be reconciled into a big tax reform effort. Where we are specifically for this week is the House will actually vote out its tax reform plan. They think they have the votes, they've got a bill out of committee, and they're moving forward with that tax reform plan. The Senate Finance Committee is really only a couple of weeks behind. It is working this week on its plan. They've thrown a couple of potential bombs in, but they're taking their chances and they're planning to move ahead and finish their markup this week and then come back late November, early December, and have a vote on the Senate floor. Now, the expedited process here in the Senate is 20 hours of debate on the Senate floor with a lot of potential amendments being at least offered in that context. So they're not done yet, but both are moving full speed ahead.
So you mentioned a bomb. I believe you're referring to the Senate's inclusion of the repealing the Affordable Care Act individual mandate.
I am.
How did that blow up?
Oh,
process?
my goodness.
Is it going to be a roadblock?
I don't know that. They've clearly, it's like a poker game. They've doubled down on where they're standing, and they've decided the most important parts of their package, as the president wishes it to be, include a 20% rate for corporations permanently. And they actually are helping pay for that with this individual change, which is the part of it that really surprised me, is that the politics of this outside of Washington are that this is a middle-class tax cut. And to have done that and take money from individuals to pay for a corporate piece, it has surprised me. But they've done that, and at the same time, they have sunset most of the individual tax cuts in this bill. Their argument being, we're just going to continue those anyway. It's not really bad for you that we've sunset them, but we're going to put into our permanent law these corporate provisions. I think they're taking a chance, but I think they think it is a calculated risk, and they will still proceed through. And the momentum, the desire to pass this bill on Capitol Hill is so palpable that the particulars of it are less important beyond some very basics than one would think.
I said we weren't going to talk about policy today, but you mentioned pay-fors. And quite frankly, to come back to exempt organizations, I was personally surprised, and I think many within the exempt organization community were surprised that at first the House bill and then the Senate package included as many provisions impacting exempt organizations and many that would raise revenue, maybe small pieces of revenue, but nonetheless raise revenue. I was struck in the House bill that there's 5 titles, one of which is labeled exempt organizations. Not 1/5 of the bill, but one title in its entirety impacts the exempt organization community. What was your reaction? Were you surprised?
I was surprised more than I should have been. In hindsight, if you look back at the fact that when Dave Camp looked at these provisions back in 2014, there were some there, not all of these provisions, but some things there. He was trying to reduce the corporate rate less than they are today. They've spent $1.5 trillion on the 20% rate or more. They've spent $500 billion on a promise they've made through pass-through these non-corporate businesses. That's $2 trillion right there, in addition to a lot of other individual provisions and some other things in the corporate area. Once one starts trying to spend that much money or lose that much revenue, you're going to be looking under every nook and cranny. And they have had hearings in the past on these issues. Some of them are itches they've wanted to scratch for a while. And to some extent, you rob banks because that's where the money is, and they think here's where some money is.
Certainly a lot of headwinds and worry,
Oh,
I
yeah.
believe, in the exempt organization
They
community.
increased their needs, and they looked over to this community to help fill some of them.
So bringing it around the horn to the next steps. We've got the Thanksgiving holiday in front of us. Christmas and the New Year and the other December holidays are right around the corner. And Congress, as you said, wants to pass something. What are the next steps, and what should we anticipate in the next, 4 weeks, 5 weeks?
I think the House pretty easy this week. I think they've had their whip counts. They're going to pass their bill. And the next week, they're away for Thanksgiving. And the staffs will spend a lot of time those 2 weeks, and some of the members, trying to think through if there are glitches in their packages, if there are ways they can reconcile the two and get ready for that next step. This week, the big issue is, has the Senate caused itself a problem in the Finance Committee? I don't think it has, with the mandate and with the individual pieces short and the corporate pieces permanent. Have they done that? I think they are likely to still get through committee this week. And then they have to count votes in the Senate. They have 52 Republican senators. They've doubled down also on this just being Republicans. Putting that mandate in took away any chance that a Democrat, I think, supports this package at any stage in this process. So that stage will be the Senate, those 20 hours of debate. Are there any amendments they have to make in that context to make sure they have at least 50 of those senators solidified to vote for it so Vice President Pence can cast the tie-breaking vote? Then comes the reconciling it with the House. And they have several paths forward. They can do an old-fashioned conference where each House has its own bill and they go in and they duke it out. Much of that is behind closed doors these days, but they do that. Another thing is it's called ping pong, like the game. They send their version back to the House, and it sends a version maybe in between the two bills back to the Senate, pinging and then ponging the bill back. They can't do that for too long. There are only a few steps of that you could do. And then the last provision, I don't think it's where they actually want to go yet, but I think it's the fastest way to do this, would be in the Senate. Their last amendment, they did this when they were doing the budget resolution that set up this process. The last amendment is an amendment worked out with the House that does some things the House has to have, like putting back in a $10,000 deduction for local property taxes, doing some things the House has to have, and then have a package that they barely pass and say to the House, you have to take this. That gets them, that's sort of the easiest way to finish this by mid-December. Mid-December is driven more than by Christmas and more than by the president tweeting that he wants it done now. It's driven by this Alabama election, long before the current controversies over that. It is December 12th, and they will be losing Luther Strange, a senator who's a good vote for tax reform. And they'll be getting either Roy Moore or Doug Jones, or if they don't seat Roy Moore, somebody else, who's not necessarily a sure vote. And so they would love to have this done before that.
Janice, thank you so much for sharing your wisdom and insight with us today. This conversation about tax reform has been very enjoyable. PwC is going to release more conversations about tax reform as the impact exempt organizations. We'll release more of our insights as this continues to develop. And thank you for listening.